we want to grow by 25%. So we're going to build out how many customers are we going to need? How many customers did we need last year to do the numbers that we did? Now, how many customers are we going to need this year to be at the new number that we're targeting? How many technicians are we going to need now?
Welcome to Jobbers Masters of Home Service, a podcast for home service pros by home service pros. We are in sunny Las Vegas, and today we're bringing you the financial guide to a multi-million-dollar business. I'm Adam Sylvester. Today's guest is Tyler Martin. He is a business coach and CFO to small and medium-sized businesses, and he's the host of Think Business with Tyler podcast. Tyler, welcome to the show.
Hey, thanks, Adam. Great to be here.
Yeah, thanks for being here. So tell our listeners a little bit about who you are, which I know you've had a couple exits in business, and a little bit about what your background is.
Sure. So I started out as a CPA. I worked for a CPA firm for many years. I was on track to become a partner, decided that I wanted to start my own firm, left, and about 5 years later, I had about 250 business clients and had a very vibrant practice. And along the way, I met a client that I got really close with and ended up joining his company and taking over a piece of ownership there. I sold my CPA practice and spent about 10 years building a staffing and recruiting firm. Ended up taking over for about 7 years. I had full control. I built it from $5 million all the way to $25 million in annual revenue, and we ultimately sold that. And since that was about 6 years ago, I've been doing the business coaching and the small business CFO services, working mostly in the service industry, with home service being a big part.
So a lot of your clients use Jobber. And
absolutely.
Cool. Okay. So I'm excited to have you on, Tyler, because I think that you do have a lot of knowledge on finances. Generally speaking, as you know, this is a weak spot for a lot of entrepreneurs. I know it was for me. And so let's get started in like terminology. What are some of the key metrics that business owners need to be focused on? Not really high level stuff, just the basics. What are some of those things?
Yeah, I mean, it's going to vary between businesses, industries, everything. But I'd say, customer acquisition cost is obviously a huge one. So what is it costing me to get a customer? And that's how you can figure out, your return on your customers. If it's costing you $500 to get a customer, but you're only making $250, you got a problem. And so a lot of times business owners don't know that. They don't really have any visibility on what that cost is to acquire a customer. So that's a big one. I would say other types of...
How do you figure that out? What's the math on that? How do you know how much your cost of acquisition is?
Yeah, that's a great question. So, I mean, there's different ways to look at it. So you have some at promotion, for example, to get customers that cost you very little. So for example, maybe door hangers, going around putting hangers on doors, it's the print cost. So if you printed 2,000 door hangers and it cost you $1,000, you're going to take that cost divided by the number of customers that you've acquired, and that would be your cost per customer.
Yeah.
So that would be one approach. Now, ad spend would be another one. If you're spending Google Ads, let's say, and every time you convert a customer on Google Ads, your conversion data would tell you what it's costing you for acquisition per customer. So something like that would be, for Google Ads, how you do it.
That's great. Okay. What's the next one? Let's talk about profit, gross profit, net profit, margin, all that kind of stuff.
Yeah, I'm passionate about this. I can't tell you how many times I've had clients come to me, and particularly in the home service business, where they are not tracking their gross profit margin. So let's talk about what is gross profit margin. So if you charge a customer $100 and you spend $50 in technicians, labor expense, and supplies, your net gross profit margin is $50. So you made 50%. It's a 50% gross profit,
which is good.
It's good. Yeah, that's good. Somewhere between 40 to 60 is usually what you like to see. So that's good. You're right in there. But many times business owners don't track that. So you go, wow, well, why is that important? You don't know what you're actually spending to complete the job. It's just like that cost of acquisition. If you don't know what you're spending, you're kind of a little bit lost. You're kind of shooting in the dark, frankly. Yeah. So this is a really big one. Gross profit margin is huge. Then another big one would be net profit margin. So that's how much is my business as a whole making in both a dollar amount and a percentage amount. These are basic numbers that really every month, a big part of this is getting your financials in a very timely manner after the month's closed and being able to look at those data points both on a monthly basis and on a trending basis, because the trending basis is what really tells you if you're going in the right direction or not.
Okay, say more about that. What do you mean the trending basis?
Yeah, great question. So you and I were having a conversation yesterday, and we were just talking about the industry as a whole, and we talked about just seeing potentially some changes in numbers in a business where the metrics weren't lining up to what historically the business had seen. And that trending data was spotting out to us as we were talking about it that maybe there was a problem in the business. And particularly, I think it was around conversion and
sales.
and if we were having the, another one, and sorry to get off a little bit of tangent here, is your average ticket price. That's a huge thing. So like how much on average am I making per customer? Knowing that gives you a good, if you're seeing over trending period that dollar amount's going down, you got a problem. Does that mean maybe I'm not doing as many upsells and add-ons to my sales? Do I have some type of issue? Is it an economic issue? What's going on? But it brings up that there's something that you have to discuss and find out what's going wrong in your business.
An average ticket makes a big difference, especially when we're talking about acquisition costs earlier, getting a client. Like, how much does it cost to get a client? Well, depends on how much your average job is. So if your average job is big, you're a big plumber, and maybe $2,000, you're willing to spend more per lead if your average ticket. But if your average ticket is only 200, maybe you're cutting grass, but that's recurring revenue. So there's different ways to look at it. But I think that average ticket is so important.
It is. And if I could take it one step further, what I do a lot of times with clients is we'll take that average ticket and we'll build that around how they want to grow. So if you want to grow, if you want to raise your revenue 10%, you really have a few different choices. I mean, one of your choices is to get more customers. The easier choice sometimes is just getting more out of a customer, providing a high value service. I don't mean getting more out of it in a bad way. I mean, providing more value to the client or the customer. And so that, tracking that average ticket gives you a metric to be able to go, wow, if I want to raise my sales by 10%, this is what I can do in terms of my pricing. And this is what my end result should be. It's big. It's a big lever.
Yeah. Let's talk about job profitability and gross profit again, because I think it's so important. So how much do you think wages, because commission goes into that gross profit margin, right? Because if you're paying your people a commission on what they sell, that goes into that. Job materials goes into that. I would even say if you're paying your people for 5-star reviews, like bonuses for that goes in the gross profit. Once you add all that up, that determines your gross profit. You said it should be around 40 to 60. So then how do you manage your labor costs?
I would like to address one thing before we get into that. I love what you just said, because you brought up some things that maybe in the most purest definition of cost of goods sold might not be included. Sometimes commission, you could argue with certain people to say, I'm not going to include it in gross profit. That's really more of a sales expense. But you brought up a great point. It's really how the business wants to look at the numbers, what's most important. So I've many times put things in cost of goods sold that might not traditionally be considered cost of goods sold, just so we could look at the business the way that it makes it most comfortable.
The numbers should serve you. You shouldn't serve the numbers.
That's a great way to say it. Now going over to labor, you said how to manage labor.
Yeah.
So let's talk about a couple different types of labor. So the main labor is your direct labor. So they're the ones, the technicians actually going out and doing the job.
Your in-field staff.
Yeah. Then we also have obviously sales and marketing type labor. And then we have overhead labor, which might be G&A, bookkeeping, accounting,
What's
admin.
G&A? What's
general?
G&A?
I'm sorry, general and administrative. Thanks for
Got it.
having me clarifying that. So you've got these different types of labor. So we're kind of gonna look at those differently. Your technicians are your return on investment, right? So technically, those folks are the ones creating revenue for you. So you're gonna look at them in the terms of utilization. So how am I utilizing them? Am I getting 90% utilization out of a technician, meaning 90% of their time is billable?
Or they drive around 3 hours a day.
Or they drive around 3 hours a day, right? I mean, that's why utilization is so important. And I want to be careful. We make the joke about they drive around 3 hours. It's really a coaching opportunity is the way I like to look at it when I'm talking with clients in particular. It's not about, hey, you're sitting under a tree drinking a beer for half a day. It's more about, do we have the network set up so it's efficient in terms of where you're going? Are we utilizing your time in a way that can make you with the highest utilization possible? So I like to look at it more as a coaching thing rather than a stick, if you will, because I think it can be perceived as soon as you start to talk about utilization among staff members. I think the perception is, you just want to watch what I'm doing.
Yeah.
In fact, I'm dealing with that with a client right now. Like, she's scared, literally, of having tracked time or having tracked of what they're doing because she's worried of the reaction of the staff because they think they're going to be watched. And so there is a cultural dynamic that needs to be integrated with that in terms of how it's presented, and you have to live it too. It can't be like, this isn't to track you, and then the first thing you're doing is pull them into an office to talk with them about their utilization. You have to be kind of nice the way you handle it.
But efficiency is one of the most important things in business.
Absolutely.
And usually the most waste in business.
True. And the biggest cost
is labor cost.
And the biggest cost.
And so it's easy to think, well, my people go fast. Well, then why is there a problem, right? And so
great.
the proof's in the pudding. I think that one of the main things that I look at, and I want you to talk on this for a minute, is if I basically want my labor, just my direct labor, my guys in the field to be 25% or less of the revenue. Okay, so I want to if I pay my guys $25 an hour,
Right.
then I need to charge at least $100 an hour to make money. If you do it 4 times, 25%. 20% is a little more comfortable, but 25% is fine usually. And so a lot of people are thinking, oh my gosh, right now they're listening. I don't charge that much. Well, that's why you have a problem, right? And so you said 46% for gross profit. So do you coach your clients to do job profitability charts and make sure that they're going through on each job and make sure it's profitable?
I don't know about each job because, depending on the number of jobs,
Sure.
like if they're small ticket, that would be hard to do.
That's true.
Higher ones, obviously, definitely. Like, I have a client that does inspection, regular pumps, and then they also do maintenance. They're in the septic business. Now, and repairs, excuse me, they also do repairs. So when they do repairs, they tend to be high ticket ones. Those ones should get scrutinized heavily in terms of the accounting, burdens, factoring, things that we're throwing into that to really understand them. The pumps, they're kind of fixed. I mean, really, we're back at looking at labor, and really network. How are we scheduling people? What's their downtime? Are we paying overtime? Why are we paying overtime if we don't even really have the capacity that would make sense for overtime, for example? So yeah, those are things. And I do agree with you. It's interesting. You brought up that $25 to 100 ratio. Many times business owners don't fully think about that, like in terms of that. And I agree with you. I always find the people that tend to do the best have their own little systems where they're not necessarily accounting rules or anything, but they've come up with their own little systems for numbers, and they're knowing their numbers by doing it. And they're kind of like safeguards, kind of. And if they do that, it creates, I believe it creates a better profitability and a better stability of the company.
Yeah. Tyler, this is a great conversation. I want to pause real quick and talk about Jobber. So for me, Jobber costs less than 1% of my revenue. 1%. So if you think you can't afford Jobber, you can. And Jobber helps me build a more financially strong company because of all the features that it does when I'm not around. So like if I'm sleeping, people can book online. When I'm sleeping, people can approve their quote. When I'm sleeping, people can pay their invoices. Those are all things that are worth every penny for me. And so if you want to invest in your business, you need to invest in Jobber. If new users can get an exclusive discount at jobber.com/podcast deal and go invest in your business today. Okay, let's talk about budgeting.
Yeah.
So budgeting, forecasting, very important. I'm assuming, do you recommend QuickBooks to most of your clients? Is QuickBooks what you...
QuickBooks Online really is the
QuickBooks are maybe
dominant.
zero, whatever.
Yeah.
But okay, so any kind of legit cloud accounting software is very important. I mean, we didn't mention that, but that's pretty foundational.
Right.
Like if you want to know your numbers and build a strong, financially strong business, you need to have like strong books, right? So hire a bookkeeper, do it every month. And so how do you budget, and how would you advise our listeners to like start budgeting their business on a regular basis?
So let me before I get into the budget, I'm going to take one step back. So you got 3 primary financial statements. You have a balance sheet, you have a profit and loss statement, also known as an income statement, then you have a cash flow statement. All 3 of these are very important statements, and they all kind of rely on each other to some degree. So it's really important, like you said, a bookkeeper and accountant. Having one is good, but having one that's doing it correctly is more important. And truthfully, many don't usually do them correctly. Whether it be, there's really thin budget target, very, very thin budgets for the bookkeeper. So they kind of just do it on a cash basis and do it really loose. The ramifications of that is that your P&L, your profit and loss, probably isn't correct because your balance sheet might not be correct. So I'd say the first thing we got to start with is we got to have good data. So once we have good data and good financial reports, and we're getting them timely, so I want those financial statements for the last month. I want them on my desk or in my email by the 10th of the month for the prior month. We want real timely data. Now, how do we do a budget? We take our financial data, our historical data, and we start with that as a framework. So let's say we were going to do a budget for 2024. We would look at 2023, and that would be our framework to start with. And then we go, okay, we want to grow by 25%. So we're going to build out, how many customers are we going to need? How many customers did we need last year to do the numbers that we did? Now, how many customers are we going to need this year to be at the new number that we're targeting? How many technicians are we going to need now? So that means we need to add 2 technicians or 3 technicians to hit that number. And we're going to build that all the way down. Do we need new trucks? Is it going to mean we're going to have to go out and get some loans and service some debt? These are all factors in building that budget. So depending on the size of the business, if it's a small business, I'd say under $1 million, I think it's very owner doable. Might be intensive with a bookkeeper. I think as you get over $1 million, that's kind of where someone like me comes in that can help put together that budgeting and forecasting to create the strategy of where you want to go and what you need to do to get there.
Yeah. So actually, I thought that too. I actually disagree about the bookkeeper thing. I think because I had a I was the bookkeeper for years, and boy, did it cost me a lot of money.
Yeah.
I thought you could just go into QuickBooks like you do with Microsoft Word and start typing. It's not like that. And there's a reason there's professional bookkeepers out there. And I didn't know what I was doing. It actually cost me a lot of money later to get it all fixed. And so I would really encourage the listeners to just it's worth every penny, no matter how small you are. Like, get a bookkeeper. They're not that expensive. $60 an hour. They'll charge you $100 a month to do your books. And I just think it's so worth it to do that. The other thing I would say, and you've probably experienced this so many times with your clients, is like the moment that I became a budget believer, my whole life changed. Because I started seeing my business in a completely different way. Because I used to think like, yeah, budgets, whatever. But like once you realize, okay, if your goal is $1 million and your expenses, and you realize how much you're paying in labor, you realize, oh, there's nothing left over right now. And it forces you to actually have a plan for your business. And so when you have bad days, you don't just shirk them off. You say, hey, whoa, that was a really unprofitable day. We can't let this happen again because I've seen how it impacts my budget. And it just changes your mindset. It changed everything for me. And I'm a big believer.
Yeah. It's like putting a magnifying glass on it. I mean,
Yes.
you're so much more aware of it. And whenever you get into the topic of budget and forecasting, it's interesting because even your perception, I think, was a little bit that way at first. It's like, budgets. It's like, do we really need to talk about this? But once you get into it, it is life-changing. It almost gives me goosebumps when you say, like, it just kind of changed everything.
Yeah.
Because it really has that type of potential to transform how you look at your business, how you run your business, decisions that you make. It takes you out of the dark.
And when you look, let's say that you've got your whole budget for the year laid out. You want to do $1 million a year. You want to profit 20%, so $200,000. 1% of $1 million is a big number.
It's big.
It's $1,000. And so it just helps you realize, oh, if I just shave a little bit off here, I don't have to shave 10%. Just 1 point here, 1 point there, 1 point there. I suddenly have a whole lot more money than I did. And so it's really a big deal. So let's talk about pricing strategies. How do you advise your clients to price properly?
Yeah, that's a great question. It definitely depends on what they're doing. I mean, in terms of their, septic pumps are going to be a little bit different than maybe pest control, for example. So I think it depends on what they're doing, but I think you have to look at what's the labor, what's the local market, what's our end goal? Where do we want to be in terms of profitability? How can we differentiate? I think is a big part of establishing pricing. What makes us different in the market from our competitors? I think I was listening to the podcast the other day. You guys, someone mentioned what is the green truck. So going out and getting a green truck. I mean, that's a differentiator, huge. I mean, but that I believe plays into your pricing because now you're separate from the market and you can hopefully command higher prices.
Yeah.
So that's a big part of it. But I think that modeling of budgeting has to play into how you're going to establish your pricing, where you want to be at your bottom line and how your pricing has to work to be there.
How do overhead prices, first of all, what are overhead?
Yeah.
But how does overhead affect your pricing? Because boy, people tend to forget about this. But it's a big chunk. My rule of thumb is like 50, 30, 20. 50% gross profit, 30% overhead, 20% net. And that 30% overhead is a big chunk. So how should people deal with that?
20% net profit is pretty aggressive number.
That's pretty healthy.
Historically, we tend to think 5 to 20%. So you're like right at the top of the mark, the top.
We don't
of
always
the
hit 20. That's the goal, though.
No, but that's cool. I mean, I love that you're shooting for that. I mean, I'm even like my mind a lot of times. Well, why can't it be 25? Like, so I mean, I love that you're on the top end of the range. But just in fairness to others, if they're looking at their books, pretty healthy.
That's a good point.
Overhead. So overhead is all the stuff that's not directly related to business. Your direct labor is directly related to your sales. Your office person that's handling admin calls is not related directly to your business. So that's overhead. Insurance is overhead. Rent is overhead.
Gas overhead?
See, to me, that's a direct cost.
Okay.
People might debate you on that. To me, that's a direct. That should be under what's called cost of goods sold, which is direct cost. Now, if it was gas related to the executive team, if there's an executive team or the leadership team, then I would put that in overhead. Yeah.
Okay.
But I don't know if I'd split hairs that much in a business. You can go a little bit crazy with accounting. And, sometimes what I see companies do is they try to separate stuff out too much, and then there's no value in the data because it's just so spread out. It's a mess.
Good
So
point.
you kind of got to have this balance of, getting good data versus how much detail do you need. What are other overhead? Office supplies is an overhead cost. Depreciation, which is the depreciation of your equipment that you buy, you spread out over time, is an overhead cost usually. So those are all the big ones, at least, that come to mind.
Do you have a framework for like what should our listeners generally be spending in overhead? Is it 20%? Is it 30%? Just generally speaking, do you have a target for that?
It varies, but I do like that 30% number. I mean,
Okay.
you have two different types of costs. Like you have costs that are going to build your revenue and grow it, hopefully, and that's really when we're talking direct costs. And then you have costs that are kind of chipping away at your bottom line.
Right.
And so those overhead costs are where we're looking for optimization, high-level optimization, meaning every dollar spent has to be having a positive impact on our business. Or we're maybe talking about how do we reduce those types of expenses because they really do impact your bottom line. And the more we can get them down without sacrificing the growth of the business, the better.
Okay, so let's talk about cash flow.
Yeah.
Cash flow is huge.
Huge.
Now, a lot of our listeners are doing residential work. Now, there's commercial guys out there, but the bulk of our listeners are residential. And so generally speaking, in my view, they should be getting paid almost immediately, if not the same day, like immediately. But there's a lot of people out there listening who let their accounts receivable, the amount that's owed to them by the clients, their invoices, unpaid invoices, just get way out of control. What would you say to them?
Yeah. So I had a client come to me recently and they had a person handling the AR, and it's a monthly billing service. And the AR person just wasn't really into billing.
Man.
And they didn't have it set up on auto bill or auto pay. And literally like a $300,000 figure of just junk. And this is a company that was also a little bit cash strapped too, having cash flow issues. So
I wonder why.
yeah. But I mean, it'd be nice to have that $300K. That'd change the whole story, right? So I think a big part of this is you got to put right people in the right seats. You got to have people taken care of and someone monitoring that work being done to make sure it's being done timely. I think you really need to focus around auto pay. So for that particular client, we've now installed a dashboard metric, which a dashboard is a weekly report of key metrics. You kind of can see how the business is doing. One of the metrics is what is our auto pay percentage? And it's gone up to 21%. And hopefully next week it'll be 30, and hopefully 2 weeks from now it'll be 60. I don't know. But the goal is to get as much auto pay as possible because now you don't have to worry about going out and collecting or having AR. You're right. You're turning cash really fast.
Yeah. But there's a difference between cash flow and profitability.
Yes.
You might have made a bunch of money on a job, but why is my bank account empty?
Yeah. That's a huge one. And I'll tell you what the big stumper is on that one. We'll just go straight to it. So profit can have timing differences. So, you mentioned if you have cash pay businesses, really pretty much your cash and your sales in theory should be roughly the same.
Yeah.
But where could you have some differences? So a good one is equipment. We go out and buy equipment a lot of times, trucks, and we finance them. We put them over, 5-7 year loans, whatever they are. Now, the loan, the principal amount of the loan is not a business deduction. It's just paying down a loan, but you're using cash flow to do that.
Right.
So your profit's going to show you, hey, I'm making maybe $200,000 or whatever that number is for the month, but your cash is going to pay down that loan. So your cash is going to say, I don't really have any cash because it all went to pay off that loan.
Right.
My P&L is going to be saying I'm making a bunch of money. So understanding that's really critical. I can't tell you how many times I've had people come to me and go, I just don't get it. Like, why am I paying taxes and I have nothing in the bank? And a lot of times it's the loan on big equipment in particular. Another big one, which will seem weird to you, but people don't kind of forget, they write themselves owner distributions if they're an S Corp in particular, and they kind of forget how much money they take out of the business over the course of the year. So a lot of times they'll take more out of the business than they've actually made in profit or made even in cash flow. And then they're in a cash flow crunch. And so that's another one that kind of comes up. Now, you brought up AR. AR is another timing issue. If you are carrying AR, that means you're showing it as revenue, but it doesn't mean you necessarily have collected it in cash. And then the other big one is accounts payable. So if you're...
Accounts payable.
Yeah, accounts payable. So if you have vendors that you owe money to, you're deducting that on an accrual basis. You're deducting that on your P&L, but you haven't actually paid it out in cash yet. So the effect of that is you got to come up with cash at some point to pay for that. And that might be in the future when you might not have as much cash as you do.
The other thing also is commercial work. Well, that's accounts receivable, but like,
No,
a
that's
lot
a
of
good one.
times people go from residential and commercial is the big trophy in their industry. Like, I can't wait to be commercial and I think this is a fallacy, but be more legitimate. I think that's silly. But if they go commercial, suddenly they don't have they're cash strapped because commercial pays differently.
Right.
And so before you bridge that gap you need to bridge that gap. Basically, you need to have enough cash on hand because it's hard to convince and force a commercial account to pay you immediately. It just doesn't happen. And that's fair, but you have to have cash on hand to do that. I want to ask you a question.
Yeah.
Do you suggest that owners pay themselves a salary through W-2 payroll every 2 weeks or just do draws throughout the year?
So
This is a big one for me. I want to hear what you think
It's
about
going
it.
to depend on the entity. So
Okay.
if you're a sole proprietor, we'll assume they were not. Sole proprietor is just going to take draws. They're not going to be a
Okay.
W-2. That really wouldn't be the normal form to have them take a W-2 as an owner. If we're talking an LLC,
Yes.
usually it's going to be mostly distributions in my experience. Now,
Okay.
you could do a W-2, but it's not really what I've seen as normal. Usually it's distributions. Well, for an LLC, they actually call them more draws, I would call them, but they're the same thing. Distributions,
Okay.
draws, they're interchangeable. Probably be more than that. Now, when you get to an S Corp, you actually want to structure it so you take a reasonable W-2 salary.
Mm-hmm.
Now that you're paying Social Security and Medicare tax on as an
Yeah.
employer and as an employee, anything above that reasonable salary, you do want to take distributions because you're not paying self-employment tax on that. And so you're actually saving, it could be anywhere from roughly 15%, but it's a little bit less than that in every dollar you pay yourself as a distribution. So really that becomes more of an issue of a tax issue than necessarily how you run your business issue.
The 5 to 20% net that you talked about earlier, that range.
Yeah, good question.
Does that include owner's pay, or is that after the owner's been paid?
Yeah, it depends.
Okay. This is an art, not a science.
Yeah. I mean, if it's an S corp and you're paying yourself a nominal salary, the theory of the nominal salary in an S corp is that you're kind of operating as the manager of the business, and that if you had to be replaced, that's what you would pay for your services. So I would argue yes. That salary that's being deducted from the net profit is how I would be looking at. I wouldn't be adding it back. I'd go, I expect 5 to 20%.
Got it. Okay.
Because you're kind of like the general manager of the business. And if you weren't doing it, I'd be paying someone else to do it. The way my mind would work.
Okay.
If you now, conversely, were paying yourself $200,000 or $300,000 a W-2, then I would go, well,
Add that back
let's
in
right
from
size that a little bit because it's not giving us a fair picture of what the business is really doing.
Right. Okay.
And that becomes a big issue. Just to take it one step further, which is beyond the scope of this, but I do want to mention it. It becomes a bigger issue if you're ever going to sell your business, how you're present, the profitability is oftentimes how the business is valued.
Right. Yeah. So someone who's buying your business would add back your owner's salary into that net. Okay. Okay. So let's talk about scaling your home service business just from a financial standpoint. What other things do you need to include if you're opening a new location or you're expanding trucks and hiring and staffing up? What are some things you need to consider before you just jump in the water from a financial standpoint?
I mean, we're kind of back to the budgeting and the forecasting. I mean, if you're going to open a new location, we're not going to do that overnight, right? Like we're thinking like 6-9 months, a year, whatever. I want to build that into the budget. I want to build that into the forecast. What's that going to cost us? How many trucks do we need? What's our rent going to be? What's our labor going to look like? One thing I see oftentimes is when businesses enter new areas, they don't really think about the travel time. So suddenly if you're driving 2 hours to go perform 4 jobs, now you only can perform half as many jobs as maybe you did in your neck of the woods. That's affecting your utilization and your costs, your profitability on jobs. So these are things you have to look at, and then you need to build them in to your budget, build them into your forecast, and factor in, what do I need to do to get a return on that is another big part of thinking about your numbers in terms of, do I want to make this decision? Sometimes, it's interesting. We're all kind of trained to think about growing the business, keep bigger.
Right.
Sometimes when you run those numbers, you go, do I really want this aggravation?
Right. Yeah. 100%.
And it slows you down. It gets you to pause.
This makes me think of something that I would encourage our listeners to do. This is like 101 financial stuff, but what I would encourage our listeners to do, if they haven't done this already, is go into their bank account or their P&L if they have one, and over the last 3 months, figure out what all of your fixed costs are every month.
That's a great one.
What's your rent? Like what all things you're going to pay no matter what you do. Things that you have to pay regardless of how much money you make and revenue, all that kind of stuff. Just what are your fixed costs? And you might be surprised. It's like, oh wow, it's $15,000 or maybe it's more, but most of our listeners are around 15,000. Wow. Okay. I I need to do $15,000 in revenue just to absorb that cost. And just bring some clarity to the situation, because if people haven't done that and just kind of this odd, vague number in their mind, they don't really know where their break-even point is and what that fixed cost is, it can be a really big game changer.
Yeah. I have a spreadsheet I do. I call it the first of the month number. And what I do is exactly what you just said. I have literally a list on a client basis of what they start the month. This is the number that they already
Because you're basing the whole.
Yeah. Yeah. The minute you start the month, if that number is 15K, you got to think about that. And when's your break-even point for the month? It might be the 9th of the month, the 13th of the month, before you've even surpassed that number. Whatever your flow is, maybe it's 3 days. I don't know. Depends on the business. But it does kind of give you a little insight in your numbers. Like, it makes you think.
Yeah.
Yeah. That's a good one.
Tyler, this is great. I'm going to try to sum up our conversation. A lot of good takes here in 3 actionable items. Number 1 is know your key 4 metrics: cost to acquire a customer, gross profit, net profit, and average ticket. Those 4 are critical to your business. Number 2 is get a legit bookkeeper. Don't make the same mistake I made. Start day 1. Adam, I can't afford it. You can't afford not to. Please get a bookkeeper so you have accurate data so you can actually grow your business with the right numbers. Number 3 is you need a budget. Budgeting will open your mind. It will open up your whole world to your business in ways you had no idea. You need to do it. If you need help, ask, but you need to start budgeting. Tyler, what do you think? Any final thoughts?
Yeah, those are great. I just say be a data-driven company. Let's be data-driven. That'll drive us to good results. And then I'd say timely data is the other one. Those are 2 big ones.
Awesome. Well, thanks for being here. How do people find out more about you, Tyler?
Yeah, so thinktyler.com is my website. I have a show where I talk with entrepreneurs every week. It's called Think Business with Tyler. You can check it out on Think Tyler, and that's where people can reach out to me.
Cool. We'll keep making a difference. I really appreciate it.
Thanks, man.
Yeah. And thank you for listening. I hope that you heard something that will make your business more profitable, more efficient, and more financially strong. I'm your host, Adam Sylvester. You can find me at adamsylvester.com. Your team and your clients deserve your very best, so go give it to them.